Super fun with all these other people too.
Okay, welcome. We're going to get into a little bit about our pension, and looking forward to hearing the good news you want to share with us today.
Sure. Great. Anything from you? Okay, great. Good morning, everybody. I'm Tim Tyndall from Alesco Advisors. It's great to see all of you. Hope you're having a great summer. I'm going to make some broad comments, and then we'll run through the three pension plans to see the performance. But as it's no surprise to any of you, we've had just an incredible first half of the year in 2025 in terms of the capital markets. It's been one of the most dramatic periods, and I'm not being dramatic when I say that, in the last 100 years. We've had an amazing downturn from February to April, and then a fast recovery. This movement from February 19th, when the stock S&P hit its previous peak, to the April 8th low in the midst of the tariff panic, the S&P only dropped that fast 3 times in the last 100 years. One of them was during COVID. The second one was during the Lehman Brothers collapse. Bob and I were just talking about that a little while ago, back in 2008. That was the financial crisis period. Yep. And then you got to go all the way back to 1929 when the stock market crashed in October of 29 that started part of the beginning of the Great Depression. So it really is a historic time that we've been through from market volatility. But as you all know, the stock market is a forward-looking mechanism. It's an amazing analyzer of data in the collective wisdom of all investors. And what the market is seeing is a positive outlook, generally positive outlook after some dark days. So that's very positive, and that's why, in part, the S&P and NASDAQ have actually hit new highs again in June, and we've continued to do that in July, a pretty good period. What's the data look like that's helping support that? Certainly there's a lot of excitement around AI and the big technology companies, but in general, while we're seeing a slightly slower economy, it's still very healthy. We're seeing inflation still elevated, but it's actually getting better. And most importantly, the consumer is still pretty strong because inflation is below gains in personal income. So people are able to keep spending. They feel like they have enough income. I'm speaking, obviously in general around the whole economy, and that allows spending to remain steady in part too because the employment picture has been relatively stable. We're not seeing big mass layoffs by companies, even if there are some targeted job reductions and maybe a little bit slower hiring. In general, the economy is pretty stable. So that's all a big positive, and because of that, corporate earnings have been pretty good in general. Tariffs obviously remain a big wild card. We've got some deadlines that the administration has set coming up in August, so that could be an issue coming up. It doesn't seem like it's going to be, in part because the couple of deals that have been announced recently that the administration is working on in individual countries are all much less than what the initial tariffs were on April 2nd when they were first announced. So the market is prepared for that, and we're seeing that in general, a lot of these tariff costs are not yet being passed on to consumers. I didn't read the article, but I saw the headline today in the Wall Street Journal about companies are eating a good portion of that tariff, at least for now, and that's how the market is reacting to it. So we've kind of gone from doom and gloom to zoom again, and that's kind of somewhere the truth is generally in between where that is, and that's been my experience over time. The reality is somewhere in between. There's certainly going to be another pause, a pullback in the market of some sort. But the first half of this year is certainly a reminder for investors that successful long-term investing is determined by being patient, disciplined, and diversified. That's how you win the long-term game. Patience in staying diversified through that tough time in April, not panicking during that, being disciplined in rebalancing when opportunities present themselves, when the market gives you a 20% discount. You want to be able to purchase stocks at a discount. We did that. We did that for you in April. And then being diversified across asset classes, not being concentrated in any particular position. International stocks have been the best performing asset class this year. So those are the big lessons. Alesco has deployed all of those for the pension plans over the past year and since our inception with you. And so you'll see that in the results. First, let's take a look at the salary DB plan, non-salary DB plan on page 1. I'll go through this in more detail, and then we'll just kind of do a cursory review of the other 2 plans because they're all allocated in the same way. So you'll see there's 65.5% equity in the non-salary DB plan. The remaining 35% is spread between fixed income investments. The dark blue is the broad fixed income holdings, and then we have a small portion, about 7% of the portfolio, in government bonds that are inflation protected securities. I'll talk a little bit about each one of those. All of them are right in the middle of your investment policy range. You see that listed there. That's something that's very important to us, to keep you kind of in the mid-range of the target at all times. In April, when your equity, when the market was down, your equity probably dropped to somewhere 62, 63%. And that's when we rebalanced, sold the bonds and bought the stocks, and then the market has brought it back up to just a little bit over your 65% target. So everything's in line with the investment policy at the end of June. We go to the next page. How is that 65% equity allocated across the market capitalization spectrum? We have been very consistent in these allocations over the last couple of years, not making any dramatic changes to them. We think it's a pretty good mix. You have about 30% of the portfolio in international. That's what's broken off outside of the pie to see how that's allocated. Again, this has been the best performing asset class so far this year. And over the 3 years, very close to better than all asset classes except maybe large cap. So that's something that was certainly not contemplated at the beginning of this year, that international would do so well. We can talk a little bit more about that as we go through the report. The remaining part of your portfolio is mostly in large capitalization stocks. That's been the best performing asset class. You're just under 50% with that. And then the remaining of the portfolio down into the capitalization spectrum.
When you say international, you mean like Euro Pacific?
Yes. So you see the portfolio broken out here. So the developed large cap space. So this is on the chart right off of the pie. That would be your large European countries, Australia, Japan, large cap companies that kind of represent the, if you will, the S&P 500 of international stocks. Then we also have some value exposure in those countries. And then we have a smaller portion in emerging markets. That would be Taiwan, China, Brazil, countries like that. So we have both the developed international world and emerging markets. That answer the question.
Yes, it does. Thank you.
Yeah, and so we've actually broken them out to some degree in the way that we do the U.S. Parts, or domestic holdings, so that they're diversified and not just in one asset class. In terms of portfolio performance, we'll see that the small cap and mid cap part of the portfolio has, if you will, a part that struggled the most. In terms of performance, international, then large cap, and then some of the mid and small cap stocks. But we're seeing an interesting trend in July that maybe small cap and emerging markets are performing better. Just in July, the small cap part, which you see broken off at the top part of the pie, is up 4%. So that's maybe some anticipation of better economic growth, potentially lower interest rates, and some of the financial stocks starting to do better in that time period. So just some interesting dynamics. We didn't make any changes in the portfolio over the quarter, nor do we anticipate any in the second half of this year. Fixed income is on page 3. It's mostly in the broad bond market, the Barclays Aggregate Index Fund that represents the broad holdings in the bond market, treasuries, corporate bonds, and agencies, which would be the Fannies and Freddies. We have an intermediate duration on the portfolio, so we're in line with the Barclays Aggregate. You know, we've talked about over the past couple of years, we did a little bit with our duration to do some risk control in the portfolio. Right now, we have a 6.3 year duration, which is in line with the bond market, so we're neutral to the bond market. These portfolios are yielding about 4.4% as of the end of June, so that's a nice yield on the portfolio. And with yields up, that's helped when we've had some volatility and bond prices have gone up, yields have come down, and that provides a little bit of stability to the overall fixed income portfolio. We're not making any changes. We're comfortable with the mix that we have here. The 7% in tips is roughly 20% of the entire fixed income portfolio when you think about that in terms of the other holdings. And TIPS have been a better performer than bonds going back to the inception of our relationship. And that's because of the difficult inflation period that we've been in. These have been a great hedge against inflation, and we currently have the portfolio managed to a roughly 60-40 mix between long-term and short-term TIPS. That's, again, we're doing a little bit of duration management, risk control. TIPS have a much longer duration than a typical bond, and so we shorten that down to somewhere in the 5-year range just to keep some risk control on the TIPS portfolio. But it continues to do well, and we intend to keep a position of about what we have, 7%, going into the rest of this year. Performance of the non-salary plan, we now have over 5 years of history going back to the beginning of 2020. You can see in your quarter to date, it was a really strong quarter. So this is from the beginning of April to the end of June, a 7% return. This is the gains that you got coming out of all that volatility at the beginning of April. So the market was down 20%, and yet you ended up with a gain of about 7% in the whole portfolio, $2.7 million, $41.4 million at the end of the quarter. And you'll notice that your year-to-date gains aren't really much more than where you were in the quarter because the quarter was so strong. The beginning of the year a little bit weak. So again, that discipline to keep invested, you've had a nice return. July has also been good. You're up about another 1.5%, almost 2%. So your full year returns, half year returns through the end of the close yesterday, you're up about 8.6%. So you add on another 1 to 2% on that, where we are currently. So July has been a good month continuing as well. Go out to 1 year, $4.3 million gain, about 11.5% gain. So that's from the end of beginning of July to end of June. 3 years, a compound return of 11.21%. That's 11.8 million gain. Lots happened during that 3 years. Again, the idea of being disciplined and diversified. And then you think back 5 years, 9%, and that 8% return over your inception is important because from a pension plan's perspective, you have an expected return of 7%. While we probably haven't gotten that in every single calendar year of your portfolio, over the long term, you've certainly met the expectation of return in the pension plan, which is very important from a contribution standpoint to manage those contributions over the long term. So that's been a positive development that the asset allocation has matched kind of the reality of the performance over the last 5+ years. We move to page 6, just to take a quick look at this kind of transition of leadership in the portfolio over the past year. Let's just focus on the year-to-date and the 1 year columns kind of towards the middle of the page. Look at the returns at the bottom. This gets to your point, Nick, about the Asia-Pacific kind of, the MSCI EAFE. That's that developed international world in Europe and Japan and Australia. 19.5% year-to-date performance, 17.73% performance in the 1 year period. Both those time periods exceeding the returns of the domestic U.S. stock market. Emerging markets as well, not quite, but very close to large cap. We've been in a period over the last 5+ years where large cap has been really the best game in town, but there might be some, starting to see a few cracks in that. Not that anything's going to happen, but the earnings expectations for those big tech companies are very high. So there's a lot of risk in that. There's very little risk in the international markets. The dollar's been weaker, that supercharged the returns, but we're also seeing some positive political developments from a market perspective in Europe. Different focus on spending, and the companies have had pretty good earnings from that perspective. So it makes sense that rotation has happened. And when you look out 3 years, it's been so strong that international has not underperformed domestic by that much, and it's been a big underperformer over the last couple of years. Your equities are in the gray bar right at the top. That's your actual return for the pension plans. And when you look across the board at all the time periods, the last 3 years, the last 5 years, 16 and 14% returns for the portfolio are exceedingly strong. When you think about the historical long-term returns of equities are somewhere in the 7 to 8% range. So we've been in a very positive stock market for those investors who are disciplined and stick with it, because there's been clearly a great deal of volatility in the last 5 years. So sticking and with your allocation in tough times, that's how you get rewarded with these types of returns. You see historically that investors don't do as well as the overall market because of their impatience with volatility. So you have to be able to overcome that. So that's all very positive, and we're hoping that we're going to see a little bit of better performance from small cap, because that certainly has been a tough period. You see that negative return for small cap in the year-to-date period, but that's a function of tariff worries, higher interest rates. So if the Fed starts to lower rates, which could come in the next couple of months, maybe a couple of meetings, we could see some benefit to that. And if the economy has more clarity going into next year. A couple things, if we go down to see the fixed income, I want to focus on the 1 year period, looking at that return of almost 6%. So that's a sign, interest rates have come down, prices have gone up, yields have come down a little bit from where we were a year ago, and that's produced that return in fixed income. And that's really been, 35% of your portfolio gets a 6% return. That's certainly been helpful to reach that 11.5% return over time. So we're really pleased to see fixed income finally having a role in the return of the portfolio, long-term returns. And you can see that the real return assets, I commented on, those are the inflation-protected government securities, the diversifier for fixed income. You can see that they've performed very nicely and outperformed the broad bond market going back to 5 years, and when you really even look at the inception time period. So that's the inflation component working, helping offset some of the duration issues, because it was a tough time period when interest rates went up. We saw that. It was a very difficult year in 22-23, but the tips have held up nicely, provided some good diversification over the long term. But you'll notice that in the quarter to date, they underperformed. That's because the inflation expectations weren't as strong, and so we're seeing that trade-off with that asset class, but we're very, very pleased in how it's performing. So with that, any questions, thoughts about the allocation or what's been going on in the market, or any of my comments?
Very good.
Okay, so your holdings are on 7 and 8 for that portfolio. I'm just going to go through the next two portfolios very quickly. Just to confirm, you see that the allocation is at 65.4 for the salary DB plan, so identical allocation, fixed income and real return in the same way, and everything in line with the investment policy. I'll skip over page 10 and 11 because the equities, fixed income, and page 12, all allocated in the same way, same impact on the holdings, and the discussion is the same. For page 13, take a quick look at that just so you can confirm the performance. That allocation is the same. Our portfolio management team does a nice job of managing these portfolios in tandem, even though with the same allocation, even though they're separate accounts. So done a nice job with that. You can see your returns are 7 and 6.5%, 11% for the full year, and your long-term return similarly 8%. Back to 2020. Any questions about that? Let's jump to tab C and page 17, and we'll go through the Utica plan. Same thing, you'll see the allocation at 65% on page 17, and it's right in line with the investment policy. So all three plans in compliance with the investment policy, right in the middle of the range, and 35% roughly in fixed income and the real return assets. We can skip over 18, 19, and 20 because the allocation is the same. And then just to confirm on page 21, from a performance standpoint, you'll see similar numbers. Again, they're not going to be identical. They're not managed in a consolidated basis, but managed in the same way. Your quarter to date was just under 7%, just 6.38% for the year to date, 11% for the 1 year. And then that 8% return for the inception, again, 1/1/20, and the 13.1 million. So when you add up all three plans together, I know, Nick, you like to sometimes do this, 41 million, 41 million, $95 million between all three plans. And with July, those gains at 1.8% throughout all three plans, you're knocking on maybe 97.
Right.
Just at
So we're just about at where
we're getting close to 100 million.
Yeah.
Between these plans. So a lot of assets and doing potential for a lot of benefit for the pension holders of the plan. Right. Any thoughts, questions about where we are? I don't know how much time you want me to go through.
This
We've
is
got
good. I'll open it up for questions.
also have the quarterly market summary if we want to talk about a couple of the things there, but I've covered a lot of the issues related to it. So just if we have another couple of minutes here, let's take a look at page 26. The comments, I've kind of covered a lot of that on the bullet points. But I think it's important to look at a couple slides in this mix to think about market psychology in terms of what happened. Clearly, tariffs and the administration's policy has overshadowed the market. And the two charts together, the tariff rate on the top and the volatility index at the bottom of the page, run in tandem. When the tariff rates were announced, the market was surprised by how severe they were. It had not been anticipated they were like that, and that's why you see the volatility index at the bottom of the page pop up the way it was. And that volatility index at that high level is comparable to COVID, the financial crisis back to 2008. So that gets to that market discussion I had at the beginning of my comments. Well, as the tariff rates have been paused and pulled down, you get to the effective rate, we're somewhere just over 10% now. The market has expected that, anticipated it, and so the collective sigh of relief is the dropping of that volatility line as we move out, and that's the market recovery that we see. So we've settled to a more normal level, and the market is breathing a sigh of relief, and that's why we're back to new highs to some degree, because the market has looked beyond this and is looking out to next year in terms of what's happening, and they're positive about it. I talked about the discipline part. If we go to page 27, here's an interesting little chart on the right-hand side of the page, looking at the period of this year and the recovery coming out of April. If you missed the best day, so you got out of the market and the worst day, but you also missed the best day. So here you are trying to be a market timer. You avoided the downturn, but you also avoided the gain. You didn't stay invested. So looking at the Russell 3000, the domestic stock market, if you just stayed invested, ran it all through, which is what the pension plan did, you're up to 5.75%. But if you missed that worst day, okay, great, you're exciting about that. We timed that, but the market rebounded 9.5% on April 9th. That came back, you were up 2.58%, so you missed that best day. But if you missed the best day, you stayed out of the market, you would have had a loss of almost 3.5%. So that's the importance of being disciplined, sticking with an asset allocation, because the best recovery days often come very quickly after a downturn. So you miss those if you're panicking and getting out of the market. So that's a very important lesson to keep centered in your thoughts. Page 28, I'll skip over. It just talks about, we know the big market downturns happen, need to stay invested. Page 29 is important because this gives you a sense of what's been happening in the international markets. We can focus on the top chart. This is the US dollar. The dollar has weakened about 10%. It's back, come back just a little bit, but at the end of June, it was down 10% from the beginning of this year. And that takes you back to levels we haven't seen since 2022. A lot impacted related to that. Mostly some governments, foreign governments kind of doing some different things with their US government debt and dollars denominated assets, but it's affected the global markets. In terms of performance, that currency return, when dollar is weak, it makes it much more valuable for international investors in the US. And you can see how much of the currency return adds on to that local performance return at the bottom. That would be if you were just investing in euros or Japanese yen. So both those markets have, international and developed, pretty nice currency returns. But it's also important to look at that local return. That was the comment I made about structural changes in these countries. The local return in developed and emerging, if you're looking at these indexes, the MSCI indexes, is actually higher than the S&P 500. So even for international investors, the international markets have performed better than ours. And that's a combination of things. Obviously, the undervalued nature of these markets, but the earnings gains and the future earnings potential is much higher. So we're very committed to keeping a portion of our portfolio in international and somewhat positive about the long-term performance. Let's go to page 31. Take a look at that. Let's get into the psyche a little bit of investors and consumers versus what the broad data is saying. Consumer sentiment is at the top of the page. That has been exceedingly weak. So this is a kind of an interesting combination of soft data, which is survey data, being weak, but the hard economic data being somewhat positive. So there's a difference in what investors are feeling and perceiving versus what the data is actually showing them. So here's some emotional impact that the data is not overcoming for investors. And so that plays into things that are happening in the market. So consumer sentiment is weak. That's surveys of CEOs and consumers, pretty low. It's as low as it's been getting back to the financial crisis. And from a market perspective, a rational investor that's not concerned about the tariffs and the policies that are going on, things aren't as bad as they were from an investor standpoint that they were in 2008. And that's reflected in what the misery index is at the bottom. That's a combination of unemployment and inflation rates. And we are at levels that are as low as they've been going back to the financial crisis. So that means jobs are okay, the inflation rates in comparison are low. So that means we are less miserable than we've been in a long time. But people still don't feel good about that. So that's the market anticipating things getting better and already being there. So that's the interesting psychology that investors have to overcome to, you can't be let all these things weigh on you. So we think that's kind of interesting to look at. Couple things on page 32 to look at inflation, kind of what's happening with that. Inflation has continued to progress at a very slow pace, meaning the decline of inflation. We had a year-over-year rate in May of about 2.4%. The chart at the top of the page looks at the headline CPI and the breakout between core and services. Services are wages. That still remains where inflation is most. The core goods have gotten down to a level that prices are pretty flat. You can see that was the problem back in the COVID era when we had all those bottlenecks in the supply chain. Prices have come down there, but because wages have gone up for people, core services are still higher. Shelter costs are part of that. But you can see that the decline is still going. The Fed's making progress, and that declining number of inflation is what's going to determine whether the Fed lowers rates or not and how comfortable there is. We were talking before the meeting about this conflict between the president and the Federal Reserve Chair about where rates are going. Fed's independent. The president can jawbone and ridicule the Fed chairman all they want, but there's nothing they can do about it. He's unlikely to fire. There was some worry about him firing him. That seems to be off the table. But it's, just in historical context, the president has always, in some ways, when inflation has been an issue, pressured. Fed chairman has just never been as public as it is today, so that's the unusual situation. But the Fed is data dependent, and you can see on the chart their projections are still for lower interest rates going out, and that's going to affect the short end of the curve. Long end is likely to stay higher because of budget deficits. But we could see if the Fed does end up lowering rates by a couple 20 or 50 basis points, the low end comes down, the long end stays up, and we end up having a more normal yield curve, which is what we're moving towards. The market is, I don't know what the Fed's going to do. Jerome Powell does not share that information with Alesco. But the market is expecting maybe 1 to 2 rate cuts by the end of this year. That there's going to be enough progress on inflation and the concern about employment being potentially weak, that they will go ahead and make some rate cuts. There's a lot of different calculations that you can look at, risk-free rate, all these things. There's a little bit of room in the market for that to come down some, and that'll help mortgage rates and everything, and it could spur the housing market a little bit. We're seeing some issues with. And that's the point on page 33 I was getting to about the potential for a more normalized yield curve You can see how that's changed in the bottom chart, going back to the end of this year, how much the yield curve has dropped, and it's starting to get more normalized, but it's on the short end. And the Fed's got to get those rates a little bit lower to have a normally sloping yield curve where we don't have these distortions. The last thing I want to comment on is page 34 from a valuation perspective. This really, we talk about this in multiple meetings, we show this regularly, but it just gets to the point of where Alesco is comfortable about how the assets for the pension plans are allocated in terms of other asset classes. This looks at the three different segments of the world. Green is the domestic U.S. market. Teal is the developed international world, that European and Japan, Asia world, and then emerging markets are in purple. When you look across all the asset classes, market valuations came up in the quarter. You can especially see that in the growth areas, small cap growth in all the areas. The chart itself, the bar, is the forward price to earnings ratio over the last 15 years. The black line is the median during that time period. The diamond is where we were at the end of the quarter, and then the beginning of the quarter is in March. So you can see values went up, the market was good, but large cap stocks in the U.S. remain elevated above median. Growth stocks especially do. Small cap and value are reasonably or even underpriced, from a value perspective. So small cap, there's a lot of opportunity there. And the same thing with international developed large cap in the middle of the page. You can see that's still centered right around the median at the low end. Even with the gains we've had this year in international, there's still valuation room to run. And then emerging markets have been beat up over the last couple of years because of the overhang from China and some of their concerns. But we're seeing progress in Taiwan and South Korea. There could be some benefit in some of those markets. And we're seeing kind of that recovery so far in June. So from this perspective, we're comfortable only having about 50% of our portfolio in the large cap part of the market. There's lots of opportunity for asset class movement, and being diversified allows portfolios to transition through this leadership stage. And even if large cap remains a strong performer, half of the equity portfolio is in that to capture a good portion of that, but we're not overexposed to it if the earnings expectations don't meet what the market is expecting and we get a pullback there. So with that, any other questions or thoughts?
That was a very, very good report.
Good.
Yeah, I mean, plus your numbers we like, so.
Yes.
I
Appreciate it.
noticed on page 27, you indicate that because of UNC attacking Iran,
Oh.
the market dipped there.
So there, I did not comment on the conflict in the Middle East and how that's played out. We've had military conflicts in Ukraine for several years. It's kind of somewhat of a stalemate going on there. There was concern about the bombing of the nuclear facilities in Iran for a short period of time. But from a broad market perspective, I think there was a sigh of relief that we could potentially have a better situation in the Middle East because of the stuff that Iran has been doing has been taken off the table. That risk of conflict and them being a nuclear power has been taken off the table for at least some period of time, and the market views that as being a positive for that region, and that maybe conflict can start coming to an end there to some degree.
Good. Any other questions for Tim? Thank you, Tim. All right, have a good weekend.
Thank you very much. We appreciate the trust you place in Alesco, and love being a part of this organization.
I'll always come to your prayers.
Thank you.
We're gonna go right into our Audit and Finance Committee. So, the first thing we'll start at is, Melissa with our, I think we had one.
We're gonna do John and then John.
Yeah, I'm sorry, I'm sorry. John, why don't you come up and we'll talk about the insurance service.
Okay. Good morning,
Hey,
everybody.
John, good morning, how are you?
I am great. How are you? Good. Well, this one was quick, guys. It's the Regional Transportation Center. And this contract runs from July 1st to July 1st. And I just prepared a little cheat sheet for you to see where we are. We didn't do badly at all. Our replacement cost limits are up from 9.5 million to 9,800,000. We got a little more in rental income and a little more in parking receipts. And basically, we did pretty good. It's a pretty small increase. Most of it is based on the increase in the limits of coverage on the building and contents.
That's why I want to get you in and out of here because it's a small increase and I don't want you to change anything.
Anybody have any questions for Nick? I'm good.
No, but it's, we don't usually see that happen, a small movement there. So, anybody any questions for John?
Thank you.
Melissa? So we'll call a, motion, please. Tina, second, Luella, all in favor? Okay,
Okay.
thank you.
All righty.
Appreciate that. Okay, we're gonna have Doug is gonna come up for our workers' compensation discussion.
Good morning, how is everybody?
One.
Good. Just, I think you printed up stuff?
Yep.
Okay, good. So everybody's got it, do you want me to be as quick as he was?
I don't know.
I can do
It
it.
all depends what the number is, you know, if it's good. If
All
it's
right.
bad, you're here a long time.
No, it's
Okay.
good, it's very good. So, if we look at the the workers' compensation is really driven by claims, okay? And I think last year you guys remember, hey, are we lucky, are we good? It turns out we're good, and a little bit lucky, okay? So over the last 2 years, in 23 and 24, we had about $409,000 in claims, which is down from $1.8 million. And then this year, we're looking at about $472,000 in claims. So as we look forward to the insurance, we still average, roughly around 100 claims a year. And when we look at the final pricing, I was able to negotiate with Travelers, and we are down from a fixed cost of 1.65 down to 1.43. Okay, that's due to the losses being better, Travelers having less risk. I did create a little bit of competition within the marketplace. Our claim handling costs remain the same, and our total cost summary is down about $200,000. Also, we have a cash. So what happens is Travelers ask for cash to pay the claims. So in the past, they've asked for around $1.5 to $2 million in claims to pay down for the year. Clearly, with $400,000 and $400,000, they shouldn't be holding $1.5 million. So on average, we were able to get them down to $1.2 million for cash. So again, it saves you another $250,000 just in putting cash to an insurance company, which they're going to hold in their reserves and put in a 5% interest rate. So it's just another way for you guys to be holding a little bit more of your money. I do think that the 400,000s are good numbers. We continually want to see these claims under $1 million for the year. So we continue to do that through claims management. So really at this time, your costs are going to be extremely low. They're basically cut down by about $1 million, $1.5 million every year since we came on board. So through that active management, you've got a good partner in Travelers. They've done a great job with the claims management. Their adjusters have been, really forthcoming on the claims and where the claims stand. So there should be, there's no smoke and mirrors here. It's really just claims management, which has driven down its cost. So
just to summarize, I see your breakout here. The amount, our cost, just to make it clear to everybody, can you kind of just
your cost.
spoon feed it a little bit?
Yep. So your fixed costs are going to be $1.4 million, which is down from
1.65.
1.65. Yeah. So those are your fixed costs. Those are billed on a monthly basis, 10 pay actually, I think. And then your collateral, which is the cash collateral replacement, went from 1.5 down to 1.2.
Good.
So it's
all
good,
good.
and claims are down, roughly $1 million a year.
That's
So
good.
you're saving a lot of money. Is this where I ask for a raise or not yet?
Not
yet.
Not yet.
John gets it first, so you got.
Oh, John gets it. We'll split it then.
Any questions here for Doug? That was actually a good report too. I want to keep it going here. Okay, can I have a motion? Luella, second. Tina, any discussion? All in favor? Aye. Thanks, Doug. Appreciate your work. Keep working hard for us.
Yep.
That was a nice little gift, Melissa. All right,
For that. Okay, sorry.
quick history.
Get your coffee or? Maybe I do.
First quarter financial statements.
Good morning, Mr. Chairman, members of the board. So I'm happy that I also have good news to share, because that would have been a path to follow if I hadn't. First quarter of fiscal year 26. And pleased to report that as of June 30, the quick ratio remains at 7.7, which is in line with last year's quick ratio at this point. Current assets are 61.3%, which is reflecting a 3.7 million or 6.5% increase compared to June of 2024. Liabilities are at 6.8%, reflecting a small increase of 704,000 compared to June of 2024. Get a little more detail. Assets, cash and cash equivalents total about 40 million. Reflecting a 2.9 million increase compared to June of 2024. Receivables and accruals total 11.7 million, reflecting a 2.3 million increase compared to 2024 June. Operating assistance has increased to 3.4 million. This is primarily due to state just being a little bit of a slow payer. Mortgage tax receivables up 328,000, which is then offset by trade receivables being decreased by 490,000 and grant receivables being decreased by 427. So our cash position is really healthy. We're able to get our receivables relatively timely, which is success. Materials and supplies total 3.6 million, which is a decrease of 563,000. That is really due to our inventory and control over inventory and disposal of obsolete as of getting the new buses this last year. Prepaid expenses and other expenses total 5.6 million, reflecting a decrease of 1.1 million. And that decrease is primarily due to the reduction of cash collateral that Doug was just talking about in regards to our workers' comp program. So we are seeing that improvement on our financial statements. Any questions about assets? Our liabilities, accounts payable and accrual expenses are 1.7 million, down 207,000 compared to June. And this is just due to timely payments. Accrued salaries and liabilities total 3.9 million, an increase of 637,000. And that is due to an increase in vacation and sick accrual leave and the adjustment that we made at the year end for implementing GASB 101, which is compensated absences. There was a change in that, and we had to also include the FICA portion of those compensated absences. Estimated claims payable total 1.1 million, reflecting an increase of 274,000, and this is because of the adjustment to the IBNR at March 31st, 2025. Any questions in regards to our liabilities? So moving on to our statement of revenues and expenditures, after 3 months ending June 30, the authority can report that consolidated operating income is 1.46 million. This excludes capital contributions and non-operating expenses. Operating revenues are 2.7% over budget, 6.7% over prior year, and 16% over fiscal year 24. So our revenues are going in the right direction, or continues to go in the right direction. The favorable variance is contributed to ridership increases across both fixed route and demand service, being approximately 8% increase over the same period of the prior year. Any questions on our operating revenues? Our operating expenses. Operating expenses amount to 21.5 million, which is 4 million under budget expectations and consistent with prior year. Breaking it out between personnel expenses, are performing 2.5 million under budget, and that is to be expected. We do budget these expenses being fully staffed, and as we know, we are still looking for operators, and then there are a few admin positions that are open. Year over year, most of these expenses have increased, and except for healthcare and pension. Healthcare expenses are lower than we anticipated, with 63 fewer claims and 4,000 fewer services.
Remember, we're self-insured. Okay, we're self-insured.
Pension expenses are also trending lower than we anticipated. That's a result of our annual actuarial valuation and changes in our 401 plan expenses. So we were able to fund some of our 401 expenses through our forfeiture account in May. So that's why you kind of see a little different expenses. Not that any percentages have changed, we just funded it differently. And then non-personnel expenses are 1.5 million under budget. All non-personnel expenses categories are performing below budget. Most of these are slightly above prior year, with the most notable one being purchase transportation. And although that we, have contracted rate increases and our ridership is up 5%, the use of the MES system has really maximized our efficiency with scheduling and has resulted in us not needing to use the as-needed runs on the contracted vendor listing, and those are at a premium. So that's where we're seeing our savings there. So in summary, overall expenses are 15% under budget, 1.5% over prior year, and 15% over fiscal year 2024. Is there any questions in regards to expenses?
How much do you have in the forfeiture account?
I can get that information from Jackie.
Melissa, why don't you explain the forfeiture account, just so everybody knows?
Yeah, so our forfeiture account is an account that is held, and money will be deposited in there when people leave the company before they're fully vested. So it's the employer match to the 401A plan. And if you leave the company before you're fully invested, the employee match then goes into the forfeiture account.
And then there's a formula for distribution.
Correct.
Right, so let me just, I will break it down a little bit more for you. So if you say you have a 6-year vesting period, we'll just throw that out there. Your first year, if you leave, you get 0.
Oh, you get 0 regardless, there's no escalation.
There's no escalation, 2, 4, 6, 8, okay.
0 to 5 is.
Okay, so that's a little bit different, okay. Good question. Yeah. Yeah, so then that money goes back out to the people that are within the plan, distributed based on a formula.
Any questions?
And it's good for the employees. It's good because it's money that they don't have to give. And for the company has already allocated that as a liability, so it's kind of linked on both sides. Okay, anything else on that?
On the expense side? So going on to non-operating revenues, 7.3% under budget, 3.8% over prior year, and 10% over fiscal year 24. The most notable variance is associated with mortgage recording tax. This is that moving target that you never know what the housing market's gonna do year to year. But it still seems to be strong with higher interest rates, and our 36% exceeding budget expectation and 44% over prior year. So kind of to summarize the financial statements, because I anticipate the gains that we've seen in the prior years will not likely continue without the COVID funds. So this was a little bit of a surprise that we had a gain in the first quarter, but overall, the unanticipated increase of ridership, or not at the level we anticipated, really helps set out. Expense savings associated with the healthcare and pension, and now with workers' comp, will continue to help that out on the expense side, and then, the mortgage tax revenue, right, that's, $700,000 over prior year, which, we are always hopeful that it's gonna increase year over year, but I would have not guessed that it was gonna be 44% over prior year at this point. So moving on to the supplemental reports, again, mortgage recording tax for this month was $825,000, $300,000 over the same month in prior year. So, we are seeing some favorable activity in receiving that revenue. In our investment report, unrestricted operating cash flow is $18 million as of June 30. Uninvested board designated funds is 4.1. The total uninvested cash is 22 million. And I think it's important to notate, like, those seem like high cash balances, but we do utilize approximately $2 million a week for operating expenses based on regular expenses and payroll. So as of last Wednesday, we were down to 11 million in, the unrestricted operating cash. And we won't anticipate so until mid-August. And right now, the treasury rates, which we'll see on the next slide, are most favorable at the 2 to 3 month mark. So we really are actively managing the cash and cash flow and ensuring that we're not tying it up when we'll need to at most. So moving on to the treasury investments, we do have a total of 17 million, almost 17.5 invested in treasury, with 5 million of operating funds being invested and the rest being the reserves. So any questions there?
It appears you're hitting the sweet spot
We
of
are,
the yield curve.
yes, we myself and Derek, we've been really monitoring that closely.
Good job.
Thank you. So during the first quarter, we had a total of 31.9 million in receipts, which also includes the quarter one SOA payment. We utilized $30.7 million for operating funds and capital investments. Reserves funding is at 17 million. So we have still a healthy cash position, but as quickly as the cash is coming out, it's also leaving the door. So, any questions in regards to the financial statements? If there's no questions, then that concludes my report.
It's a good job.
Yeah, another good report. May I have a motion? Yeah. Second, Robert, all in favor? Aye. Anything else? We have now we have the other few stuff. Okay. Moving into, resolutions. Okay, Chris is gonna talk about the exhaust extraction system installation. It's resolution 38.
Thank you, Mr. Chairman. Good morning, everyone. This resolution is for a vehicle exhaust extraction system that will be located downstairs in our maintenance bays. The contract will be paid for using 100% state dedicated funds. The invitation for bid was publicly let on May 29th. 9 vendors were invited. In total, 16 bid packages were downloaded. On June 20th, 1 bid was received from Air Cleaning Systems in the amount of $132,889. A full waiver for MWBE participation was approved by New York State Empire Development on this contract. Therefore, it is our recommendation that the board authorize a purchase order to Air Cleaning Systems in the amount of $132,889 for this system and its installation.
Questions on the air cleaning?
What kind of system you have down
I don't believe we have a system right now, Jeff, is that
We
correct?
do, we have a system, but it's very old and antiquated. The hoses are cracking and leaking out. And it's not pulling enough CFMs to get the exhaust out.
So that might be a capital project in the future. Okay. May I have a motion? Julius, second. Neil, any discussion? All in favor? Aye. Okay, thank you. Thanks, Chris. Jason, you gonna come up and talk about, minivan services awarding contract?
Thank you, Mr. Chairman. Good morning, everybody. This resolution is for minivan services A, contract paid for with operating funds. The invitation to bid was publicly let on March 28th. 26 vendors were invited, 6 of which were New York State certified minority and women business enterprises, and in total 20 bid packages were downloaded. On April 18th, 3 bids were received, with the lowest responsive bidder being CNY Cab Service. A full waiver for MWDE participation was approved by the New York State Empire State Development on this contract. Therefore, it is our recommendation that the board award the contract for minivan services A to CNY Cab Service for a 5-year term commencing February 1st, 2026.
What's minivan A?
There's a minivan A and a minivan B. I think they just have different schedules for routes.
So what?
Questions for Jason on this? If there's no question, I'll ask for a motion. Julius, second. Tina, any discussion? All in favor? What's any other business for order? Okay, let's take, it's now 6, we'll start off at 10:15, the regular meeting. welcome to our meeting, July 25th. We're gonna stand, I'm gonna ask Barry Shulman to lead us in the pledge of allegiance.
Pledge allegiance
to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Thank you.
Thank you, Barry. Thank you for being here. And your beautiful wife. Quorum is present. Our next meeting date is August 22nd. I might have a personal problem with that, but I will get that out to everybody as soon as possible, and I'll talk to Anthony if he needs to cover. Let's see here. We'll have an audit and finance committee. We'll also have a board meeting. Will start at 9:30. I need a motion to approve the regular minutes of June 20th. Tina, second. Julius, any discussion? All in favor, aye. I also want to report out on, with Monty retiring from the board, Heather Snow from Oswego will be a board member. And I did have a conversation with Heather. She is familiar with mobility up in Oswego. And she's looking forward. She had a scheduled vacation. She could not be here today. But I think she's gonna be a good asset, and Monty will be truly missed by all of us.
Is that already been approved by the zoning board?
Yes.
And we've worked with Heather for a number of years as the mobility manager in Oswego. So I have several staff, Steve, Bren, they're in contact with her quite a bit, so it'd be a good resource for us.
Great. At this point, I'll ask for our CEO's report.
Thank you, Mr. Chairman. Good morning, members of the board. In July, typically in the summer, we kind of slow down, but we increased some of our public and community events. So first things, we met with Assemblyman Magarelli, Steve and I, to thank the Assemblyman certainly for his support in the transportation budget this year, and follow up with some of our progress updates, our system redesign, BRT, looking at future projects as we talk about, just giving him an update. We're building a facility in Utica, and some other things, shared the website for him and his legislative aide, Craig, to take a look at Better Bus on a Docket, which is our system redesign, which the service development team will go out with another public outreach here, probably later this summer, early fall. So all in all, good conversation with him. Also that day, we participated in the 35th anniversary of the ADA, Americans with Disabilities Act. I know Tina was there, who had a spotlight and a speaking opportunity. We put a bus in the parade, and we have for several years. The bus also acts as a mode of transportation for individuals that can't walk in the parade from City Hall to the Jerry's Rescue Monument in Clinton Square. But we're happy to provide this service, and certainly happy to celebrate the 35th anniversary of this act. I don't know, Tina, please.
It was awesome. We had a perfect day. We weren't sweating, we weren't rained on, and the mayor was actually there for the proclamation, didn't have a dentist appointment. And we had a lot of really great people step up to speak about how important it is to maintain people's ability to participate in community. We encouraged people to bring signs based on cuts that we are knowing are going to happen, and we had a great rally. I really enjoyed emceeing it and being able to rile people up for a call to action.
Awesome, thank you. July 15th, we hosted the Public Transit Leadership Institute. So this is a portion of NIPTA that is a 6-course or a 6-segment course that's all year long. We've had several staff members, including myself, and Melissa's done it, Jeff, and the list goes on and on of individuals that have participated in this. So this is the next round. We have 4 individuals here in Syracuse that are participating in this program. But we host them. They travel from every property. They get an insight and a tour to each property and how we do things all a little bit differently to provide public transportation in our communities. So we hosted them on July 15th. Great discussion with future transit professionals and people coming up in the industry that we're happy to be part of that. Some community involvement, as I mentioned, one of the things that I always encourage is how do we get involved in the community and showcase what we do as a transportation authority. June 21st, just after our board meeting last month, we did participate in the Pride Parade down on Solar Street, Inner Harbor. Very well attended parade. It was the first time that we've actually walked in the parade, but we've always had a bus that then turns into a parking lot shuttle for individuals getting back and forth to the Solar Street lots of the parade. July 3rd, the Albany Symphony Orchestra, celebrated the bicentennial of the Erie Canal at Harbor Point in Utica. So we, similar to what we did on the grand opening of Harbor Point, provided a parking lot shuttle for community members to go and participate in the celebration. This was part of a series of the Albany Symphony Orchestra traveled across the state. They skipped Syracuse, but they hit the different cities along the canal from east to west to celebrate the Erie Canal. Also in Utica on July 4th, we participated in a parking lot shuttle for the fireworks display that the city of Utica does. The parking lot shuttle was from Mohawk Valley Community College to Proctor Park and back. Very well attended event. And we're glad to be able to provide that service. That is something we've done for many, many years. It's something we've never really talked about in the service we provide out there in Utica, but we have done that. And then also July 8th, which was a very busy day, as you can tell for us at Centro, the Municipal Housing Authority requested us to do a tour from the mayor's office. The state comptroller was on this bus and several other state officials to do a tour of the city of Utica, looking at housing opportunities, some housing developments that they have in the city. It's very well appreciated for us to provide that service. We received positive feedback from that service from the mayor's office and the mayor to provide this service, so we're happy to continue to do that for them.
And we're very happy with affordable housing and some expansion for the community. It's a lot easier to conduct a business out of a moving office like that, so it went very well.
And then we're still
Next year, you're gonna walk with us, okay?
Yes,
The
absolutely.
ADA.
Yes.
That's one thing we've never had. You guys provide the bus, but you've never walked with us. That would be really cool.
Okay, it's something we can put on our radar and get the marketing team, Steve and Bren, to make sure we put that on the list. And then we're continuing to have our topics, our discussions, capital planning, recruiting, our RPM program, certainly as I talked about, NIPTA, SMTC. So a good productive month on the front of community involvement and participating in different events for Centro. Any questions on my report? Julius?
One area is, I noticed that when we first started, we had subcommittee meetings and something like that. Because I would like to see if, I'm on the, which one, establishment I'm on.
Yep.
I'd like to see that activated again, because
Gotcha.
we can go into more details about what's going on. But now we not even do that here.
Yep.
But we can go into more details about what's going on.
So in order to take care of it.
Right. Any other questions on my report? Going into VP reports, first one up, we'll go with Ron.
Morning, everyone. Members of the board, Mr. Chairman. Today, I mainly have some updates on our call bus services, and because Josh Gardner is out on vacation, I'm also going to be giving the quarterly call bus report. First, I just wanted to let the board know we received all 7 of the previously approved supervisor vehicles that I think it was about 6 months ago. So those are all deployed now between Utica and Syracuse. They look great, much needed improvement, and our supervisors are much more comfortable, and they just wanted to extend their thanks to the board for approving those. With respect to Call-a-Bus operations, we just completed our Call-a-Bus annual refresher training for our vendors. This is a required training. We trained dozens of drivers at different vendors over the course of a couple weeks. Topics included tie downs, harnesses, safety standards, and we do this to make sure our high standards are being met by all of our vendors, and it went off without a hitch, really well. As previously mentioned in prior board meetings, we continue to work to find ways to fulfill call bus rides in-house. We're experiencing staffing shortages still, but we are trying to find innovative ways to fulfill those rides in-house as much as possible. We recently extended a call bus memorandum of understanding that we put in place to allow for our full-time call bus drivers to get call a bus extra work. And this allowed them to specifically get call a bus related work. Prior to that, we didn't have anything in place to do that. That went very well. We recently extended it, and we're going to be reviewing that extension for further extensions, but it is going well, and we've been able to bring more call a bus work in-house because of it. We also recently signed a MOU with the union to create a 7th full-time call a bus run. That was working together, we combined a couple of blocks of work to create a full-time run. We also established a threshold to create an 8th run at a certain staffing level. So just bringing these all up, we continue to make progress on bringing some of that work in-house to the extent that we're capable. Finally, for our call a bus report, we continue to see increases in call a bus ridership. We are up 6% year over year for the quarter. We completed over 50,000 rides for the quarter as well. Utica call bus ridership saw the biggest increase at over a 22% increase. Despite notable increases in ridership compared to last year, we are pleased to report that our budget remains on track with last year. This achievement can largely be attributed to the enhanced efficiency of the scheduling facilitated by the VIA scheduling software, which we just added about a year ago. We started that with Move, and we extended it to call a bus services, and it's been working phenomenally well. We've been able
Has the we have a problem with the VIA. I will get picked up before somebody, and we've got to take everybody off the bus because I got to get off. Is that glitch being worked out?
So I know that Josh is working with VIA on that. I don't have an answer on whether or not that has been finalized and
because that is the biggest glitchy thing. And the other issue, and this is not a VIA issue, this is a driver issue. People are calling me who are visually impaired, who are supposed to be door to door, and when they're getting
subcontractors, it's a 50-50 shot whether they're gonna get assistance. One of my friends, Dawn, called me and she said, the bus driver just opened the door and she happened to hear the bus door open and she figured out by herself how to get to the bus. And the driver's like, well, I opened the door. And she's like, well, I can't see anything. You're supposed to speak to me, assist me in some manner.
And typically we do keep those notes and we'll provide those services for what are needed.
I just wanted you to know they're not happening.
Are we getting specific? Can we get specifics of is it a certain individual? We don't have to discuss it here, obviously, for confidentiality purposes. But can we touch base either after this meeting or next week to figure out if we can pinpoint some of those trips, who the drivers are, make sure whether it's a vendor.
Yeah, I will reach out to the people who reached out to me, see if they can remember what the vehicles were at least.
Or even give us a name and a day they traveled and say, oh, it was this trip, and we can pinpoint it from there to see what they're scheduled to be.
Yeah, I'm away next week, but if people get back to me,
yeah,
I'll put it in an email and I'll send it to both you and Josh.
Okay, perfect. Thank you.
One other issue I would think, it's not a bad issue, but since I'm retired, I go down to different agencies and I talk to them about the call bus. Some of them knew about the call bus, but I'm glad that you got that form that we have, physical form. But some of them, I guess they're busy doing other things. Are you reaching out to the different agencies?
We are in contact with other agencies to make sure that we're doing things.
Because a lot of the seniors, I'm a senior citizen now, so
Sure.
I noticed that some of the senior citizens.
Julius, you're what? You said
I am. I keep looking at the mirror and I recognize that. But I noticed that some of the senior citizens are still not sure how to do this, and I'm not quite sure how the agencies are.
Sure. And we do regularly perform outreaches,
And I'm out there like a crazy woman.
That's why I want to get Tina one day to explain to our meeting about what process and stuff.
And Julius, one of the things that I've been working on is being more
involved in the community as we talk about these things. So I've been to meetings with the Onondaga County Office of Aging with Joanne Decker. I'm actually speaking this Sunday at the Spina Bifida. I'm on the panel to talk there. One of their questions is how do we get outreach? How do we continue to push this as we see an increase in ridership and demand for these types of services? You know, how do we get there? So we're getting more involved to have these discussions, be in forums where there's other agencies that are there to promote it and share that information. So we've been doing that to reestablish ourselves in the community, to have those discussions and hopefully continue to get the word out.
Yeah, because I've been talking to like the Southwest Community Center and Town and Jubilee programs like Northeast Community Center.
Yeah, we can follow up with them. I know we worked with Walt and Twiggy to continue those conversations, but we can reconnect with them and make sure they have the information. You know, certainly working with Arise. You know, we have our ATAC committee who represents a lot of these organizations that we meet with quarterly. So we continue to have these discussions, but if there's something we're missing, you know, certainly share it with me, and we can find ways to get out there to the community that if there's a group that's not fully understanding or we're missing something.
Very good.
That concluded my report.
Very good, man.
Thanks, Ron. Jeff, I don't know if you want to walk up or you just want to go from there.
Right.
Make a short quick one.
Thank you, Chris. Morning, Mr. Chairman, morning, members of the board. I'll talk to you about Cortland. As you know, we're at the Highway Department and we have secured a location in the Grant Street building. It's a building that has garage bays and a working office space. They also have 2 other buildings on the property with plenty of parking space outside. David Caraccio has been, our project manager, has been really spearheading this whole project to get the building in good operating condition, along with the help from procurement, IT, and buildings and grounds. Some of the things they've been doing is working on the new flooring, patching and painting walls, furniture, lockers, installing network cables, the server, plumbing, ADA compliance, entrance ramps and stairs, doors, electrical, cameras, security, fence, signage, patching and striping of the parking lots, air compressor and drop rails, just to name some things. So it's a long list of a work in progress, and we anticipate being in there late August, early September. So we'll keep you posted.
Yes.
Yeah.
Better than I
That's
thought.
quick.
Yeah, they've done a fantastic job with the building. If we had pictures next month, maybe we can put them up as we get progress, but where
had
it
some
was to where
pictures.
it is, it's.
But I figured we can wait until we get some better pictures that look better. It's kind of empty looking, so.
Yeah.
All right. As for the Gillig roof issues we have a company, Fleet Services here from Texas on site working on the buses. There was a total of 8 more buses that need to get repaired. They're underneath the fall protection, getting that done currently, and anticipate getting all the buses completed by the end of next week.
Now, will they have a warranty on that warranty?
Yeah, they're gonna give us a warranty, 12-year warranty on the roofs. And this isn't just for the roofs that were affected, it's for any roof that we have within the 2400 series bus. So if it does start leaking, they'll warranty it. All right, next thing is fueling issues. We've got 3 skids that run the compressors and keep our fueling station going. We're down to 1 right now, and that one is struggling. And we are trying to get the buses all filled during the night, and if we don't, like for instance, last night we had 18 buses that couldn't get fueled. We had them coming in this morning to get them fueled first thing, so we got a couple crew members doing that right now. Next week we've got Don Farcone, he's one of the original builders, coming out to help us get the programming and look at some of the stuff, in addition to getting our backup skid up and running. And hopefully that'll help us out. Worst case scenario, there's the National Grid fueling station. Unfortunately, it's 20 minutes away. And there's another fueling station that's over off 57. It's 20 minutes away.
So what's the long-term fix for this?
Well, we have the new skids coming in.
Okay.
And we anticipated from Trilling it was going to be June, July, but now it's pushed to October, November. So hopefully by October, November, and with Dawn coming in here, we're hoping we get some things fixed, and the compressor 2 that died, hopefully we get that one back up and going.
What are the skids?
Yeah, they're skids. They're engines and compressors that compress the natural gas.
So there's probably some frustrations with personnel regarding this?
Oh, absolutely.
Okay, so are we trying to be as cooperative as?
Absolutely.
Yeah, we are coming up with a game plan. If we do have to execute going out to outside property to fuel, working with the union right now to do something there.
Frank, any comments?
Not really, I'm kind of worried about the fair coming up. Hopefully we can get through that unscathed. Get the employees to step up and I have to do some overtime or work throughout the week. Normally we fuel on the second shift.
Right.
So we might have to fuel all day. So, we'll see what happens.
Yeah, and Chris has been keeping me in the loop with this, so I appreciate that. Good.
And this is part of, not to speak on Jeff's behalf, but this is part of a longer term upgrade. We've been talking about this for quite some
Yes.
time, for a number of years. And certainly COVID put a hitch in some of that. We had to pivot a little bit from different skid types we were looking to get at CNG engines. We've now pivoted to electric, so then we put the electrical supply in. So some of the timing and getting things to line up and with COVID and certain things, the timeline was a little delayed, but we're hoping that we'll start the first skid in the fall, and then we'll progress from there to support the system will actually be better and more efficient in the long run.
Yeah, Trillium said they're anticipating a March finish date. Okay. Last thing is driver barrier update. Queen City Barriers, they're working on an engineering document for the latch that's going to be for the stanchion pole. Hopefully we'll get something next week or so. I can report back next month on what we're going to be doing. Okay. That's all I have.
One question, Marlon, you take care of this now. Sometimes I've been talking to some of the drivers and that shield they have, they've been having problems with that. Are you working to try to solve that problem?
Yep, it's working on it right now.
That's what the engineering conversation you just mentioned to continue improvement of that sheet.
That's all I have. Any other questions?
Good luck.
Thanks.
Thanks, Jeff. Steve.
Good morning, everybody.
Morning.
Mr. Chairman, members of the board, I'm going to give you an update on ridership. Again, good news again for the month of June this past year. Syracuse was up 10%. Auburn City was up 10%. Oswego, Fulton, Mexico combined was up 6.4%. And in Oneida County, Utica was up 14%, and Rome was up 32%. The numbers continue to be very strong.
What do you think,
surprisingly strong.
What do you think? Why?
I don't know. I know in Rome, Rome is easy. Rome is the system redesign is working. That's simple. Utica is about 88% of pre-COVID numbers, which is very strong. It's not as strong as Rome is right now.
What's Syracuse from pre-COVID?
City services is about 74%. So we're running more efficient. We don't have 74% of our service on the street, but I know that generally speaking, when the economy struggles, our ridership tends to go up. I think there certainly is some of that going on right now that could be increasing our ridership. People maybe not be able to afford cars and vehicles and insurance and whatnot. Gas prices are not up. That's usually an indicator. The gas prices are pretty stable. But I also think that there's been some return to work issues with some agencies are not allowing remote work anymore. A little bit here and there, but I'll be honest, it's very strong. Surprisingly, I figured maybe we'd be up 2 to 3% this year. We're looking at, as Melissa reported with the financials, it's about 8% over the previous year. That is very strong. No complaints though. We're doing our job. We're getting people from point A to point B, which is good. The city of Rome numbers are crazy right now. They're going to be even crazier next month because of the tornado they had last year, really dampened ridership. So the year over year next month is going to be something insane, like 70% over the previous year. But that's not really relevant. I think our services are they're working. Yes.
What about the veteran free passes?
The Veterans Pass, good question. Veterans Pass is getting a lot of use. I anticipate that probably over the course of a year, we'll probably do between 30 and 35,000 rides on the Veterans Pass. I don't know how many of those individuals had previously used our service and just went from paying a fare to being free, but I would assume that there is a significant number of individuals who are using the pass that didn't use public transportation before, or certainly veterans that used our service now using it much more.
Yeah,
And being able to get through
drive to people who are veterans, they didn't know nothing about it. So I'm kind of,
Yeah.
as much as my ignorance and
Send it to us if you have to. We can direct them in the right direction. There are certain designated veterans agencies that we want to that we want to direct them to, because it's not just our bus pass, but there's a variety of other services that are available to veterans. They want to make sure they do one-stop shopping. They don't want it all over the place. They want to make sure that the veterans have everything that they need. So that's been going very well. Any questions other than that regarding ridership? At this point, I'm going to bring Paula Trone to the table. Paula is going to go over our service standards, which is part of our Title VI program that we have to prepare every 3 years, and we're trying to
Hi, Paul.
Thank you, Steve.
Yeah.
Sorry, I have trouble looking at the lights. I have to face this way. Thank you. Pardon me. All right, this is your Good morning, all. Hello. Okay, so I'm here to present another one of our updated Title VI documents. This one is the CNY RTA Service Standards and Policies. This document sets goals for improving customer service experience and providing equal access to service. For example, by not picking and choosing which vehicles go into which neighborhoods. Okay. Right. These are targets that we strive to reach, and whether or not we reach them can be dependent on operating costs, driver shortages, and even construction. We conduct the Title VI monitoring program based on these standards and policies, so the changes that we're asking to make today will be part of the next report, which we do in 2028, but you can look forward to getting the current plan next month when I will be back. So we're all excited. We're excited, right? Yeah, so Title VI monitoring program report will be next month, and I can't wait to share it with you. So, as with our other Title VI documents, the standards and policies are reviewed and updated as needed every 3 years as part of our Title VI program report. The last update to these standards and policies was in 2019, and as you know, a lot of things have changed since then. So back then, we had 2 documents, one for Syracuse and one for the rest of our locations. What we've done is streamline this into one comprehensive document and spelled out any differences in the standards between the properties. We tried to simplify the language in the document and apply universal standards as much as possible. Okay? The content has been brought up to date to apply to our current fleet. Thank you to Jeff and his team for information on that. And to better align with customer travel patterns, which we looked at in the Service Development Department. So the notable revisions are included on the cover letter, which is your executive summary. So I'm just going to talk briefly about the top 3. So our on-time performance goal was decreased from 90% to 85%, which matches our Clever system. Our service availability, which reflects our ability to map travel distances from bus stops and sets a bus stop spacing standard, which we didn't have before. And a third, our transit amenity policy, which applies to our bus shelters, benches, etc., was updated to apply universally to all locations and notes that the stops should be in the top 15% of the most frequently used bus stops for the location, with some other caveats. Okay, and again, all the details are in the report. We will need to update these standards and policies again after the Syracuse system redesign goes into effect, because at that point we will have BRT and the Syracuse system will change enough in which we might need to revise some of our policies. So that concludes my summary. I wanted to keep it brief. Does anybody have any questions?
Could we add a maximum to the bus stop machine ride as well as a minimum?
Well, she'll come back with a report on this. Which we have for her. What was the question?
Anyway, maximum.
Maximum.
So we got the minimum for, I'm looking at urban density, the last bullet under service availability, of 3 bus stops per mile. We got the minimum there, could we have a maximum?
So we're not gonna place more than X number of bus stops per mile?
Right.
I mean, it's something we can look into. I don't know if anybody else has something like that.
Are you thinking like controlled costs?
I think you're saying that the bus is stopping every 50 feet.
Yeah, and obviously there's implications in certain areas, we have requirements that need to be met, we wanna meet people where they're at as well. But, right. Type blocks, urban area, is every corner necessary? Maybe there's a maximum that can be put on here, or a suggested maximum, obviously, we don't wanna have ourselves in too much, but.
Sure.
I think initially too, we were looking at Rochester, theirs is a minimum of 4 per mile, and we actually discussed that, and it was determined that was too many, so that's why we went to 3 as the minimum.
I think we're going in the right direction, certainly.
Okay, yeah.
I think the concept of the bus stop diet is.
We're ready.
Yeah, I know. I understand that, and it's, I can tell you other agencies have done it. It's been a little bit challenged. Because you know what's gonna happen is you're gonna say, well, now you have to walk an extra 2 blocks to get to your bus stop. Well, I've never had to do that for 40 years, and then it's a challenge. But I think that having the maximum is a step in that direction, where you now have a standard to say, this is our standard, we're trying to meet the standard, and this is why.
Yeah, right, it helps with that discussion.
Correct.
If and when it comes up.
Correct.
And one thing we have seen, sorry, Paul,
No,
is
no.
people are willing to walk a little bit further for more frequent service.
Right.
So if
Right.
there's if that is an outcome of a bus stop diet, certainly we could see some positive in that type of situation, but that's some things we have to look at.
Yeah.
Because I noticed on East Genesee Street, you have a bus stop almost every street area, you have a bus stop. But on Solana Street, you took one down over, that you had a bus stop, you took one down over, not Cooking, but Homer Ave, you took one down.
I don't know, Steve, I don't know
Yeah,
about that.
I'm not familiar with that particular stop, but that's something that we, anytime we get a
Yeah, because I
request
know
in-
places you have, every other street you have,
Yeah.
some places you don't.
Yeah.
That makes sense. what I'm
So,
saying.
Yes, it does.
So, I'm sorry,
No, go ahead.
I'm trying to. So the maximum number of bus stops, is that something you'd like us to add in here and bring it back next month for approval?
Yeah, if you can, that would be great, or if it leads us into a larger discussion, which it might, maybe it's some, more generous language that doesn't necessarily say a certain amount, but I'm sure there's a way to word it appropriately.
Alright, so then for a parliamentary question, am I gonna move a motion here, or am I gonna wait until next?
I would
Oh my
let
goodness.
us go back to the table and
Yeah,
bring this
cause
back.
I'm seeing that there's changes being,
It's not.
going back, yeah.
I wanted to come up to Mother's Day, that was my goal.
Yeah, no, Paul, you're doing excellent, you're doing excellent.
Yeah,
I don't know if I can do this again next month. We'll hit on the 1 point.
But keep that cheerfulness you got there, you know.
Thank you. I tried. Okay, well
So
then I
we're
won't
gonna
ask
hold
for
it.
it.
Yep, we're gonna hold this. We'll hold back this motion and we'll convene.
If you can't keep, we'll do it, so.
That's all right, Pete. Okay, so then that's, does anyone else have any questions?
Just me?
No? Okay.
No, it's
That's a
good.
great one, thank
That's a
you.
good point, though.
Mr. Berg. I appreciate it.
Yeah, you know what I mean?
Good job, Paul, appreciate your work on it.
Yeah.
You know what I mean?
Can I sit back down with you?
Absolutely.
And now I'll have Brent do an update on this.
You did good, you did good.
And, I think the system redesign will address that in some fashion.
I'm sure.
Open some of it, for sure.
Yeah, I mean, we've already started touching on a couple of communications issues.
Good morning.
Morning.
Paul. Wanted to give you a couple updates as to service development and such projects going on. Cortland you have heard about the building and some of the other things from other departments, but wanted to touch on how it's going from a service development perspective. This was our first full sign up in the Centro system. So we really spent a lot of extra time going down and making sure that the drivers understood how our system worked, the paperwork we use, all our forms, and how to make their jobs easier, quite frankly. And so this time we also did change a few routes. We made some more linear instead of making a big loop. You know, if you get on just south of Cortland and want to go to Cortland, you used to have to ride the bus all the way around, and it might take you an hour to get back up to Cortland. But so we split some of those routes to do 2 out and backs instead of a big loop, which makes it more efficient for us as well, and certainly easier for the customer. Now, these changes that we did last month and that we are looking at for September are temporary changes. Really, this is still our learning curve, right? So we are learning how Cortland works and what is best for them. And so we plan on making these tweaks throughout the system, probably for the next, 6 months or so, to make sure that we're thinking correctly in their service stuff down there. And then next year, we will hold an official public hearing when we're ready to make all the things permanent.
So you're getting a lot of feedback from the.
We are. I was just going to say, in the meantime, we are reaching out to them, not only going to talk to the drivers and the supervisors in our office, but also we've been going out to apartment complexes and senior centers and such, just to make sure that they understand and they aren't surprised by changes. And so we've been talking to them a lot. Obviously, Josh has gone down and introduced the call bus system, and so we constantly are telling them about that because not all customers know about that either. And there was something else in my mind, but we've reached out to multiple agencies.
Is the call bus system same here in Syracuse as in?
It is, yep, 3/4 of a mile from our fixed route. And they didn't have it before, so they just don't know how it works. And so we're making sure to speak to as many people as we can about that. And the other thing was their Transportation Advisory Committee that meets quarterly. I'm on that committee, and that's got all the social services folks at the table. So that's also a really good spot because their clients are our customers often. So that's also a really good spot to make sure that they understand our system. So I just wanted to keep you in the loop as to, we are making some incremental changes, but they're temporary right now as we're learning their system. And then we'll go out officially next year to say, okay, we think these are the ones that should be permanent. Let's talk about it to the public officially.
Because I noticed when we had the grand opening program, some of the people came on the bus that we were on, they wanted to get on the bus.
I do get compliments every time I go to their transportation, their tech committee, and I get compliments that it's going well and that they appreciate us and all good things. So yeah. Switching gears to Oswego, we talked last week, and we didn't talk last week. We talked last month. We were getting ready to go out for a public comment period in Oswego. And it was really just to tell our customers and the public about the upcoming changes that we're planning for January. That went well. And I'll tell you, we spent the whole day out there. We had a lot of feedback in Fulton. We had a little bit of feedback in Oswego. We've since reached out to some more folks in the city of Oswego so that we could make sure we are where they are, so that we get more feedback. Again, lots and lots of feedback in Fulton. And so as we were chatting and had a little bit of downtime between customers, we listened to their ideas and were brainstorming. James and his team in service development went back to the drawing board a bit, and we've made some adjustments to our plan based on that feedback. So our plan is to go back out again in the next, I'm gonna say August, September, go back out to the public again, not officially, but to the bus stops and say, hey, we heard you, this is what you said, and this is what changes we made based on what you said. And then our official public hearing will be in November, I believe. Am I right on that? I believe in November, where we'll go out officially. We'll hold a 30-day public comment period for people to officially go on the record, et cetera, and we'll bring it back to you to ask for permission to make that make those changes in January. So that is all to say, we've been talking to a whole bunch of people, and we are trying to listen to what they say and build our system based on how we can be efficient and also listen to the customer's needs. So that's good.
That's a good.
All good things.
Appreciate it.
That's it.
Have we been able to engage SUNY Portland? I know we did initially, they have their own service, and sort of welcome them into the fold, hopefully, potentially, or.
That's something that's on our radar. I think, we know there are some challenges there. One of the issues that we're gonna have right off the bat is bus operators. Is I do not believe that if we take over their service, we'd be able to take their bus operators because of, their, situation at the college. However, that is the goal. That is, they have expressed an interest in having us operate their service. We certainly are interested in doing it. And I think that's something that we'll have ongoing conversations in the not too distant future.
Are you utilizing the same bus that we have here? Because I know you have different colored buses.
They have different buses in Portland, and SUNY Portland has their own fleet of vehicles that are very unique and kind of different from anything that we use or that the previous Portland buses are. So it's a little different. Yes. But I think it would be it would be in everyone's best interest if we were to have a partnership with SUNY Portland.
Yeah, I think we do a great job with SUNY Oswego. I'm sure they see that. I don't know if they're mentioning it. Maybe they are, but I think we do a good job up there. They're probably looking at it.
Yeah.
I haven't met a college, university that's in the transit business that wants to stay in the transit business.
SUNY also sits on the TAC, so we do see them, fairly often. So even though we may not have the drivers today to handle their service, we are constantly telling them that we're there and doing well. So that's good.
And you're cool. Yeah, you're gonna go to Portland. I know where you're going. Yeah, they're cool. We are doing outreach in Portland right now for bus operators. Billboards. We're doing social media. We're doing ads on our buses. We're doing everything we can to kind of shake the trees a little bit down in Portland and get more bus operators. So that's going to be ongoing.
That's one of our biggest things. And certainly looking at, I know Rob and I just want to send our thanks to the operations team here in Syracuse. They've been crucial in fulfilling the service in Cortland. Still to this day, we have not missed a trip down there, and we've been backfilling from up here. So it's a huge success for what they're seeing down there. Hopefully we can continue to make progress.
Good to hear. Any other questions for our team?
Bruce, you've been a little bit busy down in Crumble too, I'm sure too.
What's that?
I said you've been a little busy down in Crumble
yes.
too.
Oh, yeah.
It's coming along though.
No, good, Steve, good job, man, good job.
Thank you guys. Mr. Chairman, that concludes the leadership team reports.
Very good. Moving into Audit and Finance Committee. Pretty good meeting today. Melissa went over the first quarter financial statements. Seem to be in a very good fiscal shape. Appreciated the in-depth discussion and also the reports that are given to us every month. Motion was made to bring it to the full board for approval. I have a motion. Luella, second. Neil, any discussion? All in favor? Aye. John Mayloff came again with, I didn't think it was a very big increase for what we needed with the insurance. We went over that. Motion was made to bring it to the full board for approval. May I have a motion? Julia, second. Robert, any discussion? All in favor? Aye. Also, Doug came forward with our workers' compensation, which I gotta say, I was impressed with the numbers for the reduction, based on, I think, more healthier work environment. Motion was made to bring it to the full board for approval. May I have a motion? Neil, second. Julius, any discussion? All in favor? Aye. Our resolutions, Chris came forward with the resolution, 3A, a contract award for exhaust extraction system installation, to award contract to Air Cleaning Systems for 132 odd. Motion was made to bring it to the full board. May I have a motion, please? Luella, second. Neil, any discussion? All in favor? Aye. And also Jason came forward with the minivan services A. It's a 5-year contract, to be awarded to CNY Cab Service. Motion was made to bring it to the full board. May I have a motion? Julius, second. Luella, any discussion? All in favor? Aye. Okay. Moving on to the pension committee. Tim from Lesko. He timed it right too. It was a good meeting to make today. I was pretty impressed with his knowledge on where our pensions that we do watch very carefully. We're somewhere in the range of about $95 million, all three pensions. And I wrote down, I like the 3 words that Tim used was patience, which we really don't have anymore. Discipline and diversification. I've always used the word diversification. I haven't used patience when I talk about the market, but I think it makes sense what he's saying right now. Because if you react to the market, none of us would be sitting around the table, we'd be on beat somewhere all the time. So I thought it was well presented, and I think we learned a lot. And the other thing, I think some people noted, so if anybody's looking to purchase a house, he talked about possibly a rate cut, maybe 1, maybe 2 by the end of the year. So I don't know if anybody's heard that, but I thought that was showed some good light too.
Certainly help our
Got a lot on my screen. So.
Yeah, and it's right. And thank you, Chris. It does help I think the mortgage recording tax too.
Yeah.
When the rates are low, our mortgage recording tax goes up. The old business, new business. I need a motion for an executive session concerning labor. May I have a motion? Robert, second. Julius. Any discussion? All in favor? Aye. Frank, please stay in the room. Thank you. Thanks, everybody. Have a good weekend. Barry, thank you. Yeah, thank you, everybody. Have a good weekend. Thanks, Ron.
No, we're going straight into it. Does he need to say something? He just did. You can go do it. Yeah, we're 5.
Okay.
taking. The meeting's adjourned, and everybody have a great weekend.
Thank you.